Hello Maverick traders and welcome to today's currency recap. It is Wednesday, September 13th. So today we'll be conducting a review of the trading day. We're also going to be going over some current market analysis, and then of course we're going to wrap up by taking a look at some trade setups and opportunities. In this currency recap, we'll be using some advanced technical analysis. We believe technical analysis is the fundamental skill of every profitable currency trader. Maverick Currencies is currently hiring serious technical traders for a trader position. Traders will trade firm capital and keep 70 to 80% of the profits. If you are a technical trader with a technically based trading system, we want to meet you. Click the application link in the description below this video. Now let's break down today's market action. All right, so first up we had the inflationary reports come in today, and most significantly, core inflation rises for the first time in around 6 months. That being said, the Fed is still widely expected to hold rates next week, but what the Fed's going to do in November is now pretty much a 50-50 coin flip. We'll see if those odds shift next Wednesday or not. In terms of today's market performance, crypto hung in there impressively enough. Stocks closing the day more or less flat, and gold and oil really going nowhere either. On the currency side of things, the New Zealand dollar, somewhat surprisingly, was the big winner on the day. But the US dollar, the pound, the Canadian dollar all held their own, and the Aussie dollar more or less flat. It was the other two European currencies, the Swissy and the euro, and not to mention the yen, that were the three biggest losers. When it comes to crypto, it was Litecoin that stood head and shoulders above all the others, as you can see here. Now, the market outlook is really interesting. I'm going to give this market a big fat donut, big fat zero. We're above the 50-period moving average, we're below the 20-period, and the slope is neutral. Now, a market rating of 0 in this circumstance is actually really interesting. There is a big move that's about to come. Whenever the moving averages are kind of flat like this and prices tightly coiled between them, it tells me we're getting ready for a big move. Up or down, that's the billions of dollars worth of, that's the $1 billion question with, with a $1 billion answer right behind it. So when we take a look at this price chart, it's fascinating to me because we've gone broadly nowhere over the last 5 trading days or so. And this holding pattern can't continue forever. And if ever there was a catalyst to get this market unstuck one way or the other, it'll be the Fed meeting next Wednesday. It'll be very interesting to see, what the Fed has to say given today's core inflation print. Now, in terms of news, tomorrow we've got a fair bit of news coming out, actually, right? So we've got core PPI, retail sales, and unemployment claims. So those are all potentially market moving, all coming out at 8:30 a.m. And then Friday, nothing too important there, except I would say consumer sentiment could potentially be an event if it's wildly, off the forecast. We'll have to wait and see. All right, now getting into some currency analysis. So as far as velocity goes, I don't feel great really about any of these scores, except perhaps seeing the yen and the Swissy on the negative side of the spectrum. The loonie being +2 is pretty interesting. When we dive into TradingView in just a moment, we're going to take a look, and then everything else is pretty much flat. All right, so let's hop over into TradingView and take a look. We're going to kick things off with the yen. So although the yen's a -2, I cannot ignore the bullish divergence that is coming in here. So this is the MACD histogram on the bottom here, and you can see how these bottoms have been rising pretty much since going all the way back to the beginning of August. So again, that tells me that there is going to be a really big move coming in the yen. It's likely to be to the upside rather than continued downside. It does mean that the yen's not going to sell off a little bit in the short term, but I'm getting increasingly nervous about playing the yen on the short side. For those of you that pay attention to these sorts of things, September is historically a very difficult month for the stock market. We're entering into some seasonally tricky territory. You pair that with the idea that the yen technically could be getting ready to take off, and you may have the makings of a significant shift towards risk-off sentiment here. I'm not saying that's what is going to happen. I'm just saying there is an interesting, there's some interesting clues being left on the price charts and in the data if you know where to look. All right, next up is the US dollar, which continues to hold its own. We're brushing up against the upper boundary line of this parallel channel here. I guess I can lower this a little bit. You can see we popped through it, traded back down, and we're hovering right around it right now. If I had to draw a trend line, a supporting trend line, it would be this one here. So keep an eye on the supporting trend line. If we break down significantly, the next key level to keep an eye on will be this low from the beginning of the month of September, 122.5 in this currency basket. Next up is the Swissy. So far playing out according to plan, more or less. We've cracked this trend line, which I pointed out last week, and that puts this lower trend line into focus. But first, we have to get through this support down here. So there is quite a bit lower to go in the Swissy before we test that support. So I like the idea of playing the Swiss franc short here. Euro, getting perilously close to breaking this long-term support line. If we do, I think there could be fireworks up ahead. So waiting to see if the euro can indeed break below this long-standing support line or not. Very similar story with the pound. We broke below this support line and we haven't really accelerated lower. In fact, we're starting to see some signs of bullish divergence here. You can see that in the MACD histogram. You can also see it in the relative strength index. So what does that mean? Well, I wouldn't be surprised if we do get a pop higher in the pound to test this broken support line as resistance, and then potentially we'll get a larger move down. The loony's been on fire. I thought there was a chance we could test this trend line to the downside and potentially crack through it, leading to a larger move down. But no, in fact, we've broken through resistance, and that puts these prior tops from the end of June firmly in focus. Remains to be seen whether the loonie can get there. I'm somewhat skeptical, but there could be a little bit higher to go in the loonie before we get a larger degree reversal. Next up is the Aussie. So the Aussie broke out of this channel pretty sharply, and now we've got what looks like a pretty decent bounce. The nature of the bounce is corrective in nature, right? This doesn't look like we're just going to start rocketing higher. Doesn't mean, of course, we can't see that, but look at the difference between the move down, where it's all red candles, versus this move higher, which, yes, we do see some large green candles here, but there's a lot of red as well. So that tells me that this move has counter trend characteristics, and I'm waiting for the Aussie to break down. Perhaps we stay within this parallel channel structure. And the New Zealand dollar is kind of really just hanging in there. I thought we'd broken out last week. You can see we poked out here, but then we traded right back into the channel. So given the false breakout, I think we can adjust the parameters of the channel now, and we might get another bounce off the upper end of this channel before we start the next leg lower. All right, but overall, I'd say I'm still fairly bearish on the New Zealand dollar. And that sums up the currency analysis for now. So in conclusion, just continue to play relative strength and weakness. A day like today, I'd say relative strength and weakness was not so obvious. And that just might mean that it's not a trading day. The volatility that we saw in the currency markets after the inflationary report this morning was really mixed. Not a very clear signal one way or the other. Let's hope that clears up tomorrow. Always make sure you're following proper position sizing and, of course, sticking to your plan, which is the most important thing you can do to set yourself up for long-term success as a trader. All right, that's it for me, folks. Looking forward to seeing you next week. Bye for now.